Assalamu alaikum. This is lecture 30 of Advanced Cost and Management Accounting. We have recently been discussing the topic of cost management. And we have said cost management is something which is a concern for most people in most organizations as well as in their personal and family lives. Various ways have been discussed for managing costs, and these have included things like value engineering, reverse engineering, business process re-engineering, and the just-in-time systems. So these are some of the newer thinkings and newer concepts that have now been brought about, and this is due to the pressure on cost. Cost is something which is the focus of most organizations and most businesses these days, and this focus has driven management to find ways and means of managing and improving this cost, and have devised all these various ways for looking at cost throughout the entire value chain system. And the value chain system, we said, was starting at the time from the supplier, where materials are received into the premises of the organization, and throughout all the processes that are incurred, the design and the production and the distribution and marketing and all those phases, right up to where the customer has received the goods, and customer services also included. So throughout this value chain, management has now tried to identify opportunities to reduce cost and to manage cost and profitability, therefore. Most of these newer thinking have been developed either in the Japanese management style or in the Western management style. This concept of process re-engineering has come in, and the just-in-time philosophy has come in. We have talked in detail about what these things are, and we will just look very briefly at the just-in-time, which was the last thing that we discussed. The just-in-time philosophy requires the organization should revisit all the processes and try to identify how best it can be handled and managed, where items such as inventory, goods received, and material handling and storage, all this cost can be minimized, inspection, quality, etc., by having better arrangements with the suppliers. When suppliers have been encouraged and they have agreements to guarantee the quality, guarantee the timing, and guarantee the inspection before delivery, in that way, when goods are received, then the manufacturer should not have to spend the cost in either inspection or storage and things like that, and movement of materials handling. So it is also received according to the production schedule of the manufacturer. So goods are received just in time so that they can be introduced into the process and the process carried out, and the finished goods produced thereafter. So this was the philosophy, and the other new thinking where processes have been realigned in order to try to manage the cost. The whole idea and emphasis now has become that cost should be managed and cost should be controlled in such a way that it can be minimized, and therefore the businesses can continue to be profitable. Of course, this has resulted from the pressures on cost on the organization. In business process re-engineering, we said that the organization looks once again at the processes that are followed by all its organization, various steps in the value chain. And all the processes are then re-examined, and there is an attempt to try to minimize the cost and rethink how processes can be carried out. A very basic example we used was of material handling. We said that the supplier arrangements can be such that material handling cost can be minimized and inspection and quality cost can be minimized. With the introduction of new computer systems and new computer programs, again, business processes have been redefined. Businesses have had to relook at their processes in order to implement these new type of business softwares referred to as ERPs, Enterprise Resource Planning Systems. ERPs are the enterprise resource planning systems are now different to what computer applications have been previously. They are now changing the way business transactions are being recorded and how documentation is handled. Basically, it is a shift to a near paperless environment. Computerized installations at each stage within the organization, all integrated and linked together, and so that they eliminate the need for creating documentation at each stage and for moving the documents along. To give you just a bit more detail, for example, the purchase order, when it is raised, the purchase order will appear on the screen in the purchase department, and they will enter details onto the screen of the required items and the supplier details and all the costs, and the purchase order is sent to the supplier. When goods are received, then in the goods receiving area, they can access the purchase order that was issued. So when goods are received and with the delivery note, they can see order reference. When they input the order reference, they can access the purchase order. And in their screen will appear a goods received note. So a goods received note is being entered in the receiving section on the computer, and they're able to access what the order was and to ensure that the order is matched and there are no differences. Or if there are differences, then a report highlights those differences. Similarly, when the invoice is received by the finance and accounts department, the finance and accounts can access the purchase order and the GRN, the goods received note. Based on the reference on the invoice, they know what was the purchase order, what was the GRN on their screens. And they can then enter their amounts and discounts and payment dates, etc., and process the payment. So entry into the computer system has therefore been done at every stage wherever the activity is being performed. So the purchase order was raised in the purchase department, and entry for the purchase order in the system was done by the purchase department. The goods receiving note was prepared and entered by the receiving department, the warehouse or goods receiving. And they entered the information for goods receipts, and the finance have had access to all this information, and they have entered the information of the finance, of the pricing and discounts and timing of payments to process the payment. So transactions are now being conducted in a way that they are being recorded onto the computer systems wherever the activity is taking place. And all that is integrated and linked so that this activity can be accessed wherever within the organization it is required. So this has also led organizations to rethink about their procedures. It has placed certain controls, additional controls of matching of documentation, of ensuring that one process is completed before the next can be completed, and things of that nature. So the processing has been re-examined under the computerized environment of the enterprise resource planning systems. This has then added to the business process re-engineering and trying to ensure that processes are efficient and they are less cost and they are more cost effective and they are accurate. And of course, they are timely information is available at the time it is entered onto the system. So it is what is called live information. That has made businesses, information that is available about businesses from different sources, from different departments, very readily accessible. There are different types of reports that can be structured within the software program to arrive at the information that is needed for management. The business process reengineering has been altered by what we have said, the enterprise resource systems. Management accounting, therefore, is going along and helping management in order to carry out the different and enhanced requirement of cost analysis, of making faster decisions, of making sure that waste is eliminated, and of cutting the extra cost. How is management accounting, therefore, affecting the JIT, the just-in-time systems? We will see that in a minute. We can see that it has to keep up. And management, in order to manage properly and in order to ensure what it is trying to achieve can be achieved, will need all the relevant information from all various parts of the organization at a very fast pace on a timely basis. JIT and management accounting. Management accounting must support just-in-time manufacturing by monitoring, identifying, and communicating to decision makers any delay, error, and waste in the system. So management accounting has now become a critical and an important part of managing and providing timely and accurate information so that management can ensure that things are being performed as planned and action being taken where necessary to make adjustments and corrections. Monitoring is essential. We have said that the systems are such that production is going to be shared with the supplier, the schedule, and supplier is going to provide on time and according to schedule all the supplies. So all these things need to be recorded and a report generated where, for example, production is defective. For example, inventory is not received on time. For example, where rework needs to be done and where there are rejects, where there are losses in the process or losses outside of the process, meaning when the goods have been sold to the customer and the customer has rejected them and returned them to the organization. So at that stage also, all these reports need to be very accurate and they need to be prepared very quickly to present to the management the information, how the performance of the system is carrying on, where corrections and changes and adjustments need to be made. That's the role that management accounting now takes on, and the computerization and the other ERP systems all help in this role. Emphasis on providing information on supplier reliability, setup times, throughput cycle times, percentage of deliveries that are on time, and defective rates. Management would need to know if deliveries are on time or they are delayed. They would need to know the throughput cycle time. Throughput cycle time, we have referred to cycle time as from the start of entering the material into the organization and then carrying out all the processes and then completing and the final product being distributed and sold to the customer. So this is the throughput cycle time. And organizations should know how long it is taking, what the throughput timing is, so that they can see where it is possible to reduce and make costs more effective. The time it takes for setup, there is going to be a standard which has been developed by the organization, but the organization will then need to know actually what time is being taken in the setup and where the standards are being exceeded, where the standards are being minimized, and in fact being, you can say, exceeded in a way that time is taken is more than the standard. And of course, organization would like to know where time taken is less than the standard. So this is the information, and there's a lot of emphasis now on providing this is even, you can call, non-financial type of information. The time taken is a non-financial information. So there is a great deal of emphasis now for the management accountant to provide financial as well as non-financial information for improved management and better world-class practices to be followed, cost reductions to take place, and the organization to be more profitable. We will now look at an example, and this is slightly complex type of an example which can be examined, and therefore students should try to see how, when the exam question is phrased and has detail, how it can be used in order to arrive at the answers and the accuracy that is required. We are going to talk about the JIT systems, and the first part of this question examines the savings from introducing a JIT system. A Limited manufactures and distributes 3 types of cars: the T1, T2, and T3. Each type of car has its own production line. The company forecast loss for the forthcoming year is as follows. Current operations, budgeted detail for the next year. T1, T2, T3 are the 3 types of cars. They have their own production line. Now, direct materials, the cost is 2520 for T1, 2924 for T2, and 3960 for T3. And so now cost information is given for direct labor, for total direct cost, budgeted production of cars, which is 75,000 each. So for the next year, budgeted number of cars production is 75,000 cars of each of the 3 types. Number of production runs. So production runs are 1,000. This means that they expect in one run for T1 car to produce 75 cars. So one run is going to produce 75 cars. There will be 1,000 runs in order to produce 75,000 cars. The same is for T2, but for T3, they expect that 75,000 cars will be produced in 1,500 production runs. Number of orders executed, they expect 4,000 orders for T1, 5,000 for T2, and 5,600 for T3. The detail of machine hours is given. Machine hours for T1 1080, this is all in thousands, and T2 1,800,000, and T3 1,680, also in thousands. So when questions are given in the examination, one needs to very carefully see what information is being given. In our case now, for the first part of this question, we have been given the materials and the labor cost, and we have been given the detail of activities which relates to production runs, orders, and machine hours. This is the information that is being given, and that is what needs to be examined and seen how it fits in with the requirement of the question. Next, we show details of annual overheads. Fixed overheads have been shown separately, and variable overheads. The activities given on the left-hand side are setups. Fixed costs for setups are 42,660, and the variable cost are 13,000 per production run. So from here we can see that the cost driver for setups is production runs, and the cost driver rate is 13,000 per production run. Materials handling, fixed cost 52,890, variable cost 4,000 per order. So the cost driver is number of orders, and the rate of cost driver is 4,000. We will continue and see the rest of the information in a little while. So now we can see here the information that is given to us. We should be able to automatically relate that the information given is of overheads, fixed overheads, and variable overheads. Fixed are separate. The variable overheads, don't forget, they are the ones where activities are given. We have to relate the cost to the cost driver. So the cost driver has been identified, and the rate of the cost driver has also been given. Inspection, fixed cost 59,880, variable cost 18,000 per production run. So for inspection, the cost driver is production run, and the rate is 18,000 per production run. Similarly, machining, fixed cost 144,540, variable cost 40 per machine hour. Distribution and warehousing 42,900 is the fixed cost, and 30,000 per order is the variable cost. Number of orders is the cost driver, and the cost driver rate is 3,000 rupees per order. Most of the time, the information that is given in the question will indicate how it should be used and what will be required for the answer. So in this case, we were first of all given some detail of the activities, the number of setups, the number of orders, the production runs. Then we are given detail of the overheads. Don't forget that activity-based costing is basically looking at the overheads and trying to allocate the cost of overheads to the production units based on activities and by using cost drivers, and therefore establishing cost driver rates. The impact of proposed JIT system. This is showing you what cost changes will occur when there is a proposed JIT system and if that is implemented. Direct labor is going to increase by 20%. Setup is going to decrease by 30%. Materials handling decrease by 30%. Inspection decrease by 30%. Machining decrease by 15%. Distribution and warehouse cost will be eliminated. By the introduction of a JIT system, you expect some costs to be changed. And as we can see here, and this might be almost typical, that when you introduce JIT systems, the direct labor cost goes up a little bit, in this case 20%. But several of the other costs will be reduced. The setup time, the inspection, the materials handling, and things such as the distribution and warehousing. That can be, in this case, altogether eliminated. This means just-in-time systems are going to be scheduled in such a way that there will not be any need of warehousing and therefore distribution through the warehousing. So the impact is that these costs have reduced, but direct labor cost has increased. Let's look at the requirement of the question. Required. Based on budgeted production levels, calculate the total annual savings that would be achieved by introducing the JIT system. Now the information has been given. We have seen various types of information relating to activity, and then the information on the overheads, the fixed and the variable overheads. We were told that the organization intends to introduce a JIT system. And we have been given details of what will be the impact of the JIT systems, where the costs will increase and where the costs are going to reduce. The question now requires that we should calculate, based on the information given, what would be the total savings of introducing the JIT system. This means that we need to estimate the total cost according to the information given, and using the increase or decrease percentages, we can arrive at the total savings at the end of this exercise. If we look at now the solution, we have to arrive at what would be the savings from the JIT system. The annual saving costs are as follows. Direct labor, we were told, was going to increase by 20%. So if we quickly go to the cost where direct labor cost is shown, the slide, it shows that T1 cost of direct labor is 1120, T2 is 1292, T3 is 1980. This is the cost of direct labor, and we are saying that this cost is going to increase by 20%. So we add all these three, take 20% and multiply that by 75,000, which is the number of cars that we are going to produce of each type. So this shows that our total cost will increase by 65,880 in millions, 65.8 million. That is the effect of JIT. The cost will increase by 65.8 million. And now in the variable setup cost, the cost driver was the production runs. Let's quickly see what are the total number of production runs. When we go back and see on our slide the production runs for each of the three type of cars, we can see production runs are 1,000 for T1, 1,000 for T2, and 1,500 for T3. This is 3,500. So effect on the variable setup cost is 30% decrease in the cost driver rate of 13,000 multiplied by 3,500, the total of the production runs. This is 13.6 million, and that is going to be the cost saving. Materials handling also reduced by 30%. If we go and see what is the cost driver for materials handling, we will see on our slide that the information that we have seen, the cost driver for materials handling is the number of orders. And the number of orders, if we see on our previous slide, it shows number of orders executed 4,000 for T1, 5,000 for T2, 5,600 for T3. So this is a total of 14,600 orders. And materials handling, the cost driver rate was 4,000 per order. This is going to reduce by 30%, multiply 30% by 4,000 and 14,600. 17.5 million is the cost reduction in this case. And the exact figure is shown to you on the slide. Similarly, for variable inspection, machining, distribution, and warehousing, here the entire cost has been eliminated. So the full rate of the cost driver, there is no percentage applied, all of that has been eliminated, and therefore that has been shown as a cost saving. So now we have seen how the information has been used. We have taken the cost driver, we have taken the cost driver rate, and we have then seen the percentage that was shown for either increase or decrease of cost. So it's a matter of calculation, but it is also a matter of obtaining the right information that is required. When we are thinking of cost savings, we are going to think of material, labor, and overheads. In our case, the cost of labor is being changed and the overheads are being changed according to the activity. So each activity was looked at, and then based on the cost driver of the activity, the rate of the cost driver, and the percentage, the total saving was calculated. Similar percentages will apply to the fixed costs. The fixed costs have been shown separately on the slide, and we can see that fixed cost per setup is 42,660, material handling 52,890, inspection 59,880, machining 144,540, and distribution and warehousing of 42,900. The same percentage will apply to the variable cost and to the fixed cost for savings. So we calculate and we put together all the fixed costs that have a 30% saving, and we put them together and take 30% of that, and 15% of the machining was being reduced, and the distribution and warehousing was altogether eliminated. So the entire fixed cost has been included in the savings. So this has given us figure in thousands of 111210. So if we add all the savings and add on the increase in cost, we arrive at the total saving of 166.5 million as a result of the JIT. So far, this question has shown us how to calculate the cost savings for JITs, for just-in-time systems. So when the organization has implemented just-in-time, it has saved the cost, and we have seen how to calculate the savings that are expected from this change. We have taken variable overhead separately and fixed overhead separately, listed all the cost savings and cost increases, and taken the net amount. So that was the first part of the question. Let's look at the remaining question. This part requires the determination of optimal selling prices. The following table shows the price-demand relationship for each type of car per annum, T1, T2, and T3. Now we are going to look at the optimum selling price after having implemented the JIT. Optimum selling price should be the price at which profit is maximum. The profit will be maximum where contribution is maximum. So in these kind of questions, you should bear in mind that contribution is going to be an important and a convenient way to look at profit maximization. Contribution, we said, is going to be sales minus the variable cost. Fixed costs are going to remain as they are. As we have seen, and we saw earlier, this is economic theory. As prices rise, demand is likely to fall. So at various different prices, the demand of the product is going to be different. As prices will increase, chances are that the demand in quantity is going to reduce. The question has given us a table showing how this is going to change and how the demand will respond to the changes in prices for each of the three products. So we are given the prices and their related demand. Demand will, of course, also be the expected output and sale. So we can see that T1, when the price is 5,000, demand is 75,000. As the price increases to 5750, the demand goes up to 65,000, and it further increases to 6,000, and the demand is going to go down to 50,000. Price increases 6,500, the demand is going to reduce to 35,000, and similarly for the other two cars. As price is going to increase, the demand is going to reduce. We have been shown for the three cars what would be the demand at various different prices as has been explained. Required. Assuming that A adopts the JIT system and that the revised variable overhead cost per car remains constant as per the proposed JIT system budget, calculate the profit maximizing price and output level for each type of car. Profit maximizing price. This is the requirement, the optimal price. And we said the optimal price will be where contribution is the highest. As the JIT system has been implemented, the costs have now changed and the increase or decrease has taken place. And now, according to this, we should calculate the contribution. So we have been given the price. So for all the different prices, we should calculate what is the contribution. In other words, what is the fixed cost, what is the variable cost. Deduct that from the selling price to arrive at the contribution. And where you find contribution is highest, that is the price which you will recommend as the optimal price. So let's take the example of T1. The setup cost, if you look at the cost driver and reduce it by the percentage 30% as given, then the new setup cost driver rate becomes 9,100 per production run, and there are 1,000 production runs for T1. So the setup cost is 9,100 in thousands for T1. We look at the example of T1, and T2 and T3 are similar and they can follow. Materials, again, do the same, reduce the cost driver by the percentage and multiply that by the cost driver volume. Inspection, machining will give you all the different now the amount of overheads that will be incurred. The total output is 75,000 and therefore the total variable overhead per car for T1 is 928. So you add up all the overheads and divide that by 75,000, you get the variable overhead per car. Direct materials, we are told in the beginning, is 2520 and direct labor after the JIT system is 1344. This gives total variable cost per car of 4792 in the case of T1. So that's how we have calculated the per unit variable cost using the new cost driver rates. Once the unit contribution has been calculated by deducting the variable cost from the price, you can get to the total contribution. And as we can see for T1, the maximum contribution is at the price of 5750, which is 62,253. In the same way, you can do the working for T2 and T3, calculate the contribution per unit, and then calculate the total contribution. And from there, you can see what is the price at which contribution is maximum. And that will be the optimal selling price for that car. We are now going to have a short discussion with one of our guests, and we are going to discuss the various cost management concepts and see how in practical life this cost management is being practiced in the type of organizations, small and large, and how it is possible to practically incorporate these concepts into real business. I would like to introduce Mr. Anjumani Sansari. He is a senior business executive. Currently, he is the president of a large group of industries in the beverage sector. Anjum Saab, I would like to ask you, first of all, in regard to cost management, how you regard the importance of cost management in our business environment today and the role it plays in business profitability.
Well, in terms of the cost management, one of the things that I would say is I would not just call it product re-engineering or the reverse engineering in relation to the product itself, but I would say process re-engineering in anything and everything that we do, because that has a contribution towards the cost as such. Because when you're doing it to the product only, then you're looking at only the attributes of the product and how certain changes within the product itself and the product mix in terms of the raw materials can, without affecting your quality and anything, can reduce your cost. When you go into the process re-engineering thing, then it takes from A to Z everything that you do as to how you can do it better in terms of saving on costs. Because in terms of doing all of those things, it only makes sense if you move towards improvement. It should not be done for the sake of doing the re-engineering, and at the end of the day you see that you have lost something. There has to be a goal. Either it's in terms of the strategically a goal, even if the costs are going up, that in future long term it brings a lot more value to you than what you lose on it. I think that's the payback that should be there. The return on investment has to be more than what has to justify it, basically. That's what it is.
Please comment on the role of product mix and market shares in decisions related to business strategy.
Well, product mix and market shares are of paramount importance in our business, because we have number of SKUs, store keeping units as they are defined, and they run in tens of SKUs as such. And in order to see, all of them are not very profitable. Therefore, the mix has to be a right mix from the point of view of the revenue management and the cost management, so that the impact on the bottom line is the same as is being planned and desired. So the planning and budgeting is very, very important based upon these two factors of the revenue and the costing as such, from the point of view of the various mix or the packages that we have. So according to that, we determine beforehand as to what percentage various packs should be in. Yes, there are certain things which are dictated by the market too, but it is dependent upon the way you put them into the market, how you market them, how do you promote them, and that affects the mix percentages. In our business, we are not just looking at the volumes, we are always looking at the market share because it has a long-term impact on the business as such. Any percentile point that we lose today, it impacts on our business tomorrow. So it has to be taken very, very seriously, because if it keeps sliding, then we may come to a level which is going to have a serious impact on the business. So many a times in terms of, but it requires, in order to really maintain market share today, it becomes very costly. So one has got to really strike a right kind of a balance, that what kind of market shares one should have, and how to manage those in a manner whereby your bottom line still remains comfortable, and it is something which really satisfies the needs of the business as such. Therefore, whereas it is important and a lot of efforts are being put into it, it has a certain kind of a right balance that's struck between the bottom line things and the market share management as such. In terms of the overall strategy, because I think when you say how does it relate to the overall strategy, it relates to the overall strategy from the point of view of what is our basic outlook, short-term and long-term. If our short-term outlook is only to make short-term profits, then we will only go for such SKUs and such sales opportunities which are only profitable. We will only market to those segments. However, depending upon our strategy, if we have a long-term goal and a long-term strategy, then we will protect our market shares and will continue to focus on to some of those which are low margin segments of the market too. Because if we lose that low margin segments today, then people who are coming as a result of, by coming into those segments, there is a certain effect, chain effect, which is taking place in terms of us losing not only those volumes in future also, or some of those volumes through which we are getting today. They will start becoming unprofitable too for us. Therefore, it does, that's a good question, it does relate to the overall strategy. What do you want? What do we want in future? Do we want to see ourselves as a low player? And a stage would come, by the way, if we continue to do this thing, a stage would come, then we would not be a kind of a player as we would probably be if we are protecting our market shares and going further.
Please talk about the need to review and re-engineer business processes and their role in managing and reducing costs.
I think there is a role on process re-engineering, and in today's environment, it's getting highlighted a lot more, and many organizations are looking at it. They're looking at it the way they're doing business, the way they're making their products, the way they are marketing it, the way they're distributing into the market. So from the point of view of the production, the selling and the marketing and the logistics, everything is being looked at. And from the point of view of HR, it's been seen as to how HR could be optimized and you get the right kind of results.
One of the aspects we've discussed in our course is just-in-time systems. Can you please tell us how these systems are applied in our environment and whether they are useful?
Well, in terms of just-in-time inventory management, I think again this is something which differs from environment to environment, situation to situation. But if we could plan something which is freely available, most businesses today, and in our business we do follow that thing, because the cost of the inventory carrying cost is something which is a part of the cost management. and it has to be looked at from the point of view of what is the optimum inventory, and accordingly the reordering is based on that. There are products which are shorter lead time, there are products which have got longer lead times in terms of supplies. So inventory levels of just in time, they are not identical for each material. They would vary from material to material, from raw material to raw material, based upon all of these factors in terms of their availability, the supplies, and at the same time, we do keep many a times there is, as I told you earlier, in terms of the resins and sugar, when the tight situation is developing in the market, and if you're keeping an eye on that, then what you do is this: you follow a different practice of just in time than during long supply situations, because when it is easily available, so it has to be a dynamic process which should keep changing and evolving as the situation and the environment is changing.
Anjum Saab, thank you very much for being with us and taking the time to share your experience and your thoughts with our students. Thank you indeed.
Thank you, Shahid. It was a pleasure talking to you. I hope it will be of some use to you in your course that you're doing with the virtual university.